To Echo Capital Easy Investment Series. It's been a very long time we engaged in a discussion for the Easy Investment Series. For some time now, it has always been a one section with myself, the host. But today we have in our midst one of the top investment bankers in the world that I know. And as a series, we would like to talk about one of the questions that I've been receiving from most of us, most of the time in our comment sessions. People want to know more about the stock market. So he's the best person to talk about the stock market to us and educate us on the foundation and the basics that we need to know about the stock market. Welcome again to Echo Capital Easy Investment Series, a platform where investment is made easy for everyone. With me today is the CEO of Echo Capital Investment Management Limited, my own boss. Thank you for honoring this invitation, sir.
Thank you so much, Sam. How are you?
I'm doing very well, sir.
Good.
And sir, so in this episode, we want to look at the stock market. There have been a lot of questions coming to us about the stock market. People really want to know how it works. And looks like the people we meet day to day, most of them do not really have knowledge about what the whole stock market means. People think it's a scam. People think so people have their conception about what it is. But I believe that this particular episode is going to help them gather knowledge in order to make informed decision. So sir, to start with, we want to know what the stock market is.
Thank you so much, Sam. Again, I'm very happy that you have elected this topic as one of the topics to discuss. I agree with you very well that the stock market is one of the areas that a lot of investors from our part of the world struggle to understand.
Yeah.
A lot of people don't understand how the market works, and why even it exists in the first place. Some people struggle to, in fact, to interest you to know that we have done quite a number of investment seminars, and I happen to always ask, usually the first question I ask, how many people are investing? We tend to have quite a small number of people that comes first and say, I'm investing. Then I say, okay, how many people are actually investing in shares? Then the number tend to be almost zero. And it's sad enough to see that a lot of people think that it's a market that they are not familiar with, or they don't know what kind of assets there. Now, there are different types of assets in the investment space.
Okay.
And one of them is the stocks or the shares. And people call it equities, people call it stocks, and people call it shares.
Yes.
Now, I'm going to try to make it as simple as possible for everyone to understand. Now, what is a stock? Let's look at it in a way that, let's say that you have a pizza.
Okay.
You have a pizza. I'm sure we all know what a pizza is.
Yeah.
And we know how pizza is sliced in the
Okay.
number of pieces.
Okay.
Okay. So, if I alone decide to buy the pizza, I own it 100%.
Okay.
Isn't it?
Yeah.
So the whole slide belongs to me.
You. Okay.
Okay. Assuming that I do not have money to buy the whole pizza alone, I can add you to it.
Okay.
So when a pizza is sliced into 12 pieces, if we contribute equal amount, you have 6, I'll have 6. But we'll have to contribute same.
Okay.
You understand?
Okay.
Now, we can decide to bring 12 people along to share that slice of pizza, isn't it? So now we actually slide it in. Each one of us, we are getting a piece.
Well, okay.
So you have your share, I have my share. So that is the shares, isn't it?
Yeah.
Now, assuming that pizza now, as we have shared it, it become public, isn't it?
Okay.
Because it's no longer for me
you.
alone.
Okay.
It's no longer private.
Yeah.
But because we brought 12 other people now to come and take the pizza, it become public.
Okay.
But other people now have interest in the pizza, isn't it?
Yeah.
Now, once the other people have interest in the pizza, now, if people like the pizza a lot, what happens? a lot more will be interested in coming to get that same pizza.
Okay.
But we only have 12.
12. Okay.
So what happens? Because a lot of people want seats, there'll be pressure on the price of the pizza. At the time we bought it 100 cedis. But because a lot of people want that pizza, what happens? There will be supply and demand coming out.
Okay.
There are less pizza than what people want.
Yeah.
So the price of the pizza will no longer be 100. It will now go up.
Okay.
Assuming nobody wants that pizza, now what happened? Everybody will be willing to sell, the 12 people will be willing to sell their pizzas. So what happened? The price of the pizza will drop. In other words, what I'm trying to say by using the pizza as an analogy is just that a stock market is where a share of a unit of or of a company is sold. That's the market.
Okay. Okay.
And the market, what they sell in the market is a unit of a company that you become a owner.
Okay.
So example would be Echo Capital now as it stands is a private company held by owners.
Yeah.
Now, if Echo Capital becomes a public company, then it can issue what is called shares. And the shares is just ownership
Okay.
in the company.
The company.
So now you own part of Echo Capital. And once you own it, the place that you can buy it is either on a stock exchange or over the counter.
Okay.
And once you buy it, you become an owner. So shares are ownership in a company. And bonds are debts to a company. And I would like to make that description clearly.
Okay.
If you are buying bonds, you are lending to the company. If you are buying shares, you are owning stake in the company.
The company. Wow, that's very much information to digest. I wanted to even ask about the difference between stocks and bonds because, just as you said, bonds meaning you are so stock means you are buying into the company, and bonds means you are selling.
Bonds means that you are the bank, so you are lending
to the company.
Yes.
Oh, okay. So most of the times people get to be on the side of bonds more than stocks.
Yes.
Because they want to be lending to the company. What do you say about that particular issue?
That's a very good question. A lot of people tend to, a lot of people believe that they want to know what they are making at the end of the day. People like to know their fixed income.
Yeah.
That's why we call bonds as fixed income.
Okay.
Because whatever income you are making is fixed.
Yeah.
So at the day of investing, you already know what you get at the end. So your earnings are fixed, but they are limited. Investing in shares, they are unlimited, but your losses are limited. So when you buy 100 cedis shares in Echo Capital, you can only lose as much as the 100 cedis you have invested because it's limited. But your earnings, as the value of Echo Capital goes up, your earnings also goes up. And there is no limit as to how high it could go.
Okay.
But for the bond, if it is 30%, you only make the 30% as once that is what is guaranteed that you earned. So you cannot earn more than the 30%. They only give you that.
Okay.
Now, a lot of people like the bond because it's fixed in nature. And also because you are the lender to the company, you have a priority also. In case the company has any issues in terms of collapse, default, whatever it is, you are one of the top people that will be paid.
Okay.
Once the company is liquidated, you'll be paid.
Yeah.
But the shareholders will not be paid.
Okay.
Because they are the owners. You understand?
Yeah, I understand.
So once you are buying bonds, you are lending to the company. And because you are lending, you have no voting rights, you have no authority, you have no interest in the business. Therefore, if the company goes down, you must be paid.
Oh, okay.
And through the liquidation processes, all the lenders get paid first. Wow. And you'll be one of those.
That's very insightful. That's very insightful. So sir, I actually want to ask that looking at risk aspect, I still want us to stay on stocks and bonds.
Yes.
Looking at the risk aspect, the aspect of risks, which one would you say is more riskier?
That's a very, very interesting one. When you look at it in the scheme of things, the shareholders bear all the risk. Because most of the bond holders, they are lenders. So they are secure with the company's assets.
Okay.
The bond holders are lenders. It's just like you are going to a bank to borrow money. You have to secure the loan that you are taking from the bank.
Yeah.
In this case, as an investor, taking bond position, the assets and liabilities of the company are
Okay.
securing the transactions that you are doing.
Okay.
So you are coming as a lender.
Oh,
So the asset of the company will be able to be used in case the company defaulted. They will use those assets to sell and pay all the lenders. The question then is whether the value of the asset will be able to take care of all the loan is another issue that we discuss. But as a shareholder, you are a shareholder. Therefore, you bear the risk.
risk.
If the company goes down, you also lose everything that you have invested in. But your losses are also limited to how much you have invested in the company.
Okay. Well.
You understand?
Yeah.
But the positive side of the shareholder is that your gains are also unlimited.
Yeah. Yeah. Unlike the bondholder.
Yes.
Who has a limit. Okay.
Yes.
Okay.
So if the bondholder has only 30%, you only pay them up to the 30% that you promised. So if the company now become a $1 billion company, you, the shareholder, have $1 billion. And surely it will interest you to know that most of the richest people in the world, none of them have taken the bond position.
Okay.
Most of them are all shareholders.
Shareholders.
So you can name all the biggest, richest guys, they have all owned shares in companies because the earning right of a shareholder is unlimited.
Okay.
A bond person, the whole year, they say it will pay you 30%. That means the whole 12 months in the year, you only make your 30%.
Okay.
But if you are a shareholder, within the shortest possible time, your shares can go up. A typical example is what is happening currently in the stock market.
Yeah.
Where within the first 2 months of the year already,
Yeah.
the composite index has returned 15% already.
Yeah.
Okay?
Yeah.
That is almost half of, even now, Treasury bill is what?
24.
24%.
Yeah. 94.
So just imagine that the composite index, which measured the performance of the entire market, has already returned 15% already.
Oh.
So it tells you that as shareholders, you will lose money, but you can only lose as much as how much you have invested in the company. That is if the company actually collapses.
Oh.
But if the company does not collapse, what it does means that you can see unrealized gain and losses in your portfolio. But once you have not sold, it is not technically losses.
Okay.
And that's one of the things I'm sure you will ask later because people are concerned about the fluctuations of the stocks.
Yeah.
The movement of prices in the stock market. People are always concerned about that.
Yeah.
So because of that, people always want to take a fixed income position, which is a straight line.
Okay.
You understand?
Yeah.
Unlike an equity position, which is the movement of prices up and down. And in some cases, it can be continuous going up. In some cases, it can also be a straight line. If the price remains the same for a long period of time. So you see that movement in the stock market, which is a lot of concern for a lot of investors.
Well, so I think with this knowledge, most people are missing a lot when it comes to stocks because it looks like there are good opportunities with stocks.
Very true.
My next question is with so we are taking this section for people who want basic understanding for stocks, so they can start taking some good decisions. So we want to know the types of stocks we have in the market.
Very good question. First of all, before I answer that question, I always tell people that Ghana stock market is one of the best stock markets in the world.
Wow.
That's a fact.
Okay.
Secondly, Ghana stock market is one of the markets that you can also make a lot of money quickly. Why? Because the number of stocks listed on Ghana stock market is very narrow. It's very small.
Okay.
Maximum about 35 or so companies. So if you are going to pick just like Lotto, you are going to play Lotto out
Okay.
of 10 numbers. The chances of you winning is higher, isn't it?
Because they
Than New York Stock Exchange has over 10,000 companies listed in
wow.
Ghana. You understand? Ghana Stock has only about 35 companies listed. And out of which just few of them performs. So once you pick those few companies that moves, definitely you are going to make money. Now you talk about the question you asked of the types of stocks.
Stocks, yes.
There are different types of stocks.
Okay.
One, the common one that we always everybody knows and do is the common stock, and it's called common.
Almost. Okay.
It's common.
Okay.
That's why I said the common one is common
Come
stock.
on. Okay.
Common stock is the common stock that everybody buys in and that you have a voting right.
Okay.
And you will have a voting right. You go to AGM, you vote on issues related to the company. So you have a say in the company.
Okay.
Okay. The second one is the preferred stock. The preferred stockholders do not have a voting right, but they have a priority over the common stock. Because they don't have a voting right, they have a say. When the company, when they are going to pay dividends, they pay them first. They treat them like the bondholders.
Okay.
Because they are preferred, they don't have a say, they don't vote your issues. So it's being treated more like a bondholders. So in case of also default and issues of a company, they have a priority and they get paid first before the common stockholders.
Okay.
You understand?
Yeah.
Because they are preferred stockholders. So they don't have a voting right. They have fixed dividend amount that is paid to them of the dividend rate, and then they are priority over common stockholders. You see?
Okay.
Then, when in terms of the stock behavior, we have growth stocks, we have value stocks, we have dividend stocks.
Okay. Yeah, I was going to go there actually. Okay.
You understand?
Yeah.
So, in terms of the category of stocks, common stock, preferred stock. But in terms of the other classification of how the stocks behave, their nature, we have the growth ones, which are entities which have the higher potential of growth. The value stocks are the stocks that are undervalued.
Okay, so they have
a potential of growing.
Okay.
Those ones are the ones that a lot of investors consider to be risky. You understand?
Yeah.
So, for instance, Eco Capital can be considered as a value stock because it's a younger company that has a potential of growing.
Okay.
But a growth stock is more of already growth state.
Okay.
It's solid. Its movements are a bit more slow.
Okay.
But it gives you stability.
Okay. Okay.
You understand?
Yeah.
Then the dividend one is that there are some stocks that are noted of constantly paying dividends. So this could be a very good investment management strategy that I want to only select dividend paying stocks only.
Wow.
Or I want to just pick only value stocks only in my portfolio.
Wow.
Or I want to select only growth stocks only in my portfolio.
Okay.
So these are investments. So to analyze a stock, because once that stock fits into your objective, you need to now look at the company. One, the first thing you want to know about the company is which industry are they? What do they do? Okay. That whatever that the company does, is this something that people like? What is the interest level of the thing? Those are the basic analysis you ask. In fact, I like reading more about Warren Buffett because his analysis is simple. Anything that I like or my friends like, I know other people will like it also. Because a lot of people like it, the company automatically make money.
Okay.
Okay. So he invests heavily in Coca-Cola. He likes Coca-Cola. He know people like Coca-Cola. He's seen people love Coca-Cola. So because a lot of people like Coca-Cola, they will buy Coca-Cola.
Okay.
And because they are buying Coca-Cola, the value of Coca-Cola will go up. Okay. So if you are picking a company like DCB Bank, they are bank. You don't have a lot of ATMs. So what is the capacity of it?
Okay.
The management profile. The people who are managing the company, do they have the expertise? Are they good in what they are doing? Okay, so once you start asking these questions, and one of the key places to go for is company website. And once you go to their website, you should be able to look for their annual reports.
Okay.
I know it's difficult to analyze it on it, but just read it for the fun of it. See the rate at which they are making profit.
Okay.
Okay, and the rate at which they are making profit.
Okay.
Their profit, is it continuously, consistently, the growth rates? Analyze it. Read the profile of the key management people. That's why they always put those things in there.
Okay.
When we go to the company's website, they put the key management. It's for a purpose.
Yeah.
Read their profiles. All these things will influence your interest in the company. So you can do on the top of analysis on these companies.
Okay.
You can pick, for instance, MTN. Everybody uses MTN.
Yeah.
And they are company listed on the stock exchange. So you ask yourself, okay, if Ghana population is about 34 million, okay, MTN says they probably have about 50 million people using there or more. I'm sure it's about 20 million people. Okay, if 20 million people are using MTN, assuming everybody is using 1 CD a day, does it mean that MTN could be making 20 million CDs a day? So those are simple analysis that you can do about the company. Then if that's the case, then you compare the company to its peers.
Okay. Okay.
In this case, you can look at Vodafone and other companies in the space.
Okay.
But because Vodafone is not listed on the exchange, you can look at, okay, MTN, okay, based on what I think they probably will be making daily. There are other banks, other institutions that probably will not be making that daily. But their stock are a bit higher than what MTN is trading. Then I think it's undervalued. So I think it's good for me to go invest now. Another thing I use most of the time to analyze companies is that I use historical prices. So I grab the prices to see movement of the prices, to be able to tell what happens month by month to this stock and compare it to the past few years. But don't forget that there's something that we also mentioned in investment, that past performance does not necessarily guarantee future performance, but it gives you an idea. So when this company, maybe every March, every year, the prices drop, October of every year, the prices go up, then you know that something happens around that time. And with that, I can make decision when to buy and when I should get out. And those simple analysis can help you. But for more in-depth analysis, I advise that you should always come to the investment firms like Echo Capital for us to be able to do those analysis for you and take you through the process.
Okay. Wow. Thank you so much, sir. I also want us to talk about what people call short buying and short selling. So they buy MTN, they wait for 2 months, there's little capital gains, they sell. And then, so I want you to combine that with the liquidity of an asset. So I am an investor. I want to start investing in the stock market, but I want to quite stay liquid. I want to stay liquid. So how do I measure the liquidity of a stock, and how do I buy and sell in a short period?
Okay, so these are two separate questions. There is another word that we all know that is called short sale.
Yeah.
And then short-term buying and long-term buying.
Yeah.
There are stocks that you can buy short-term. Okay?
Okay.
Short-term buying and selling is just that you buy this stock. There are some stocks that are very aggressive. Okay, when I say aggressive, they fluctuate in terms of movement a lot. You see a lot of those companies, especially in the developed market. One of those stocks are like Tesla. You can drop, you can jump today to a high and drop the next day.
Yeah.
Those ones are a bit aggressive.
Okay.
So people usually take advantage of those movements. And even trade during intraday. They can even buy in the morning when the market opens. By noon, when they realize they reach the peak, they sell and get out. People buy stuff for short term. When they reach the level they are expecting, they sell and get out.
Okay.
You understand?
Okay.
The long-term buying is when you just buy, hold for a long time,
Okay.
and for it to reach a level or until you need some money, you don't touch those stocks. So those are long-term buying.
Okay.
I want to bring in the short sale because people tend to confuse the short sale to short-term buying.
Okay.
Short sale is when you actually sell a stock that you do not own. Okay? It is not yet in a part of the world. But in the US, New York Stock Exchange, US brokers, they offer those services.
So you can sell.
You can stock a stock that you do not own.
Wow.
It's called short sale.
Short sale.
So when you short sell a stock, this stock you have not owned it.
Yeah.
But your analysis revealed that the prices of the stock will go down. Like what is happening now to Tesla. So people who are smart about it, they sold the Tesla that they have not bought yet.
You say, how is that possible? How do you sell something you don't have?
The brokers offer you that.
Oh, okay.
So you can sell, but the point is that you are going to buy it back to the broker, for the broker.
Wow.
The risk point is that your analysis, you are selling high. And you are anticipating that the value will drop for you to do what? To buy back.
Yeah.
And then you make money. But if your analysis proves otherwise and the price goes up, you still have to buy it.
Oh, okay.
And give to the broker. So let's say Tesla now is $300. Your analysis shows that it's going to dip. So you sold. So in your portfolio, you have negative Tesla on your portfolio.
Okay.
That you sold it at $300.
Okay.
So when Tesla now dropped to $200, you can buy it to offset your position.
Yeah, I get it.
But if Tesla goes back to $400, you still have to buy it to offset it. So that is why it's risky.
Okay.
That is why so far in our part of the world, Ghana, we don't have that yet. But those of us that do a lot of foreign, you trade on New York Stock Exchange, we have access to that.
Okay.
So that is different from short-term selling and short-term buying, long-term buying and all those things. Okay. It's just about the holding period. You understand?
Yeah.
The short-term buying is just a holding period.
Yeah.
But short sale is selling something that you have not owned with anticipation that the value is going to go down for you to buy. And those are the two.
Wow. So the aspect of liquidity, an investor wants to assess the liquidity of an asset or of a stock before buying because he actually wants to see whether if you want to sell, will he get a chance to, for people to buy in the market?
Yes. That's a very good question. I can tell you that now Ghana Stock Exchange is way more liquid than it has been in the past.
Okay.
Now, thanks to the pension schemes and other foreign investors. So now selling, when you talk about liquidity, it's just how quickly can you convert your asset to cash. That's all about it. So selling stocks on Ghana Stock Exchange is just how quickly will somebody buy it for you.
Yeah.
And the reason why I'm giving credit to the pension funds is that because the pension funds are mandated by the investment guideline approved by the NPRA and the trustees, they are mandated to invest into by buying shares. So because of that, the fund managers are always looking for good stocks or good companies listed on Ghana Stock Exchange to buy.
Okay.
So because of that, now liquidity has improved. So technically, when you contacted your fund manager or your broker that you want to sell, it's just a matter of putting it out there. Some brokers or some fund managers will reach out and buy it and convert that. And usually, trading is done trade day plus 3. In other words, we say T plus 3.
Yeah.
So it's trade date plus 3 to settle. You understand?
Yeah.
In the US now, I think they've moved past the 3-day plus. Some are trying to do T+1. I'm not quite sure. Well, but in Ghana, we are still doing T+3, which is 3-day plus 3 days.
Oh, okay.
So when you trade the shares today, it must settle in the 3 days time.
Okay.
Payment must be made in 3 days time. So that's why you say T+3.
Okay.
It must settle. So the same thing applies to your liquidity. So when somebody buys your shares today, it might settle in 3 days time for you to get your cash.
Oh, okay. Okay. Wow. Okay. So we want to be bringing the foundation level of this. We would like to have another section actually and go into it. But
Yes.
to end this section, I want us to go into quite. So an investor sitting at home right now want to make a decision, but his question is: so how does the economic indicators, a country's economic indicator, affect stock? And how does yes, so I think we can take that. Yeah.
Okay, very good point. The country is a country.
Yeah.
And all the other businesses operate within a country.
Okay.
That's why economics, finance, investment, we always say that the two main risks is what? Systematic risk and unsystematic.
Yeah.
Country risk and company specific risk. Those are the two. So each company has its own risk. Then you have the country that you are operating in, its risk also.
Okay.
You understand?
Yeah.
So because of that, if you are making investment decision, you want to look at the country risk. Then you look at the various companies that you want to invest in. They are unique risks. It has to do with the sector that they operate in. It has to do with the clients and other factors, the management and all that. Okay. Now, your job is to diversify to reduce those risks.
Yeah.
That's why we always tell people that when you are diversification, there are different levels of diversification.
Okay.
There are country diversification, region diversification, asset diversification, regions, and all that.
Yeah.
So that you are not exposed to one particular country. There are a lot of Ghanaians there are a lot of rich Ghanaians that all their investment is in Ghana. So it's exposed to Ghana risk. So it's always advisable to expand your portfolio to be able to diversify so that, God forbid, anything is happening to Ghana, the other countries are safe and you are fine.
Yeah.
Just like some people went and put all their monies in the GOG bond. When the haircut comes, all your funds are locked up. But if you have diversified into other countries' treasury bonds, if Ghana is having issues, other countries may not be having the same issue. You understand?
Yeah.
So, just like the question you're asking, because of this, you are mindful of the risk. So that will influence the assets that you select. You understand?
Yeah.
So because of the unique risk that the companies have, the country risk is also, those are all these things influence the stock selection process.
Wow. Okay. All right, sir. So my last but one question. We want to end this section once again, as I said. So what are some of the, we've talked about risks. So what are some of the risks or challenges someone who want to invest into, start investing in the stock market is likely to face?
Someone who
want to invest in the stock market is likely to face the challenges.
Now, again, earlier I've said that you need to be mindful of your objective.
Yeah.
Once your objective is clear, your duration is clear. The challenge is that identifying the right investment firm that will support you through the process. I always tell people that if you don't understand the space, it's best to use the experts to do it. You could open an account with a broker, but the broker will not advise you.
Yeah.
He will only buy and hold for you. You need an investment banker or a fund manager that will actually be doing what? Making the investment decisions on your behalf.
Yeah.
That includes the asset selections. So for you to not have personal challenges on your own, advise that you consult your investment advisors to help you through the process. Because as you are busy doing your work as a professional teacher or a politician, you will not have time to be monitoring the stock market.
Okay.
So you want to give that to someone whose job is to monitor the stock market, to prepare reports, to analyze the stocks and select the good stocks for you.
Okay.
Such that when you are making money and you realize that it's good time to sell, they will sell.
Okay. Okay.
And their job is to present a report to you to tell you how much money they are making for you.
Wow.
So if you want to take on that responsibility of managing it yourself, then you must be prepared that you will face some challenges. You may miss on opportunities. You may have to be chasing brokers for statements yourself. You may have to be analyzing stocks yourself.
So, yeah.
And you may get it wrong.
Yeah.
Because that is not your field.
Okay.
That does not mean that we investment bankers also don't get it wrong. We're also human beings. So we also bear the risk because we also analyze these stocks. And there is no guarantee that your analysis will always be positive.
Possible. Okay.
So we also, that is the more reason why that discussion is always important in terms of asset selection. So that if one of the assets that we select is not doing well, others will be doing well to complement the losses.
All right, sir. Our last question. So, we want to start, or someone want to start investing in the stock market. Can you please give us a guideline, a step by step? Someone who has listened to you right now and want to take a step and start putting little monies in the stock market. A guideline that the person can use.
Good question. Two options.
Okay. Okay.
One, you can call a broker. They'll open an account for you. You can start buying. But if you know what to do.
Okay.
Now there are internet platforms that you can also open a brokerage account. You can do it.
Okay. Okay.
The second option is you can contact investment firms licensed by Securities and Exchange Commission.
Like Echo Capital.
Like Echo Capital Investment Management Limited.
Okay.
They'll open an account for you and give you an account number or a Momo number. Then you can do what? Start putting money in. They can analyze the various stocks and build your portfolio stocks for you. Your portfolio of stocks for you. And then every month you can be doing what? Putting money in the account.
Okay.
And then they'll be buying stocks for you. Okay.
Yeah.
On a dollar to cost basis or CD to cost basis.
Okay.
Because as they are buying for you, you are averaging. You understand?
Okay.
So today, MTN is 2 series 50 pesos. Next month you are buying, it could be 2 series 60 pesos. The following it could be 2 series 40 pesos.
Yeah.
It can average out over time. So you can do that.
Okay.
If you have a lump sum, you can also open the account and put it in there. They can buy the stocks for you. And we can manage it and look at it and monitor it and make decisions when to sell out and or hold. So our part of our research is to determine whether to sell or to hold or to buy. And when we do that, we analyze that, then we make decision whether we should sell or we should stay in there.
Okay.
And that is how you make money actually. Making money buying stock is actually selling when it's high, buying when it's low. But when you just buy it and keep it perpetuity till you die,
you miss opportunities.
You miss opportunities. But there are times that it's at a very high point and it drops, you may not know. A typical example is at one point, I believe Fan Milk was as high as 17, 18.
Oh, okay. Wow.
And people who bought it during the IPO and still holding it to date have missed that opportunity. Now it's, I think, 3 cities thereabout. So they've missed that opportunity. So it's very important that you give your portfolios to licensed investment firms to actually manage these stocks for you and ensure that you make the return that is due you and you enjoy that the stocks, you enjoy the returns that you make from the stocks.
Wow. That's a very insightful one. Thank you so much for your time, sir. We very much appreciate that. And to our viewers, I believe you have much to digest So this is the episode on understanding stocks analysis 101 with the CEO of Eco Capital Investment Management Limited, Mr. Dela Ali Agbo. Now, so we will be taking questions, but for the sake of time, if you have any other question, we'll be glad to take them. Please put them on the comment section, and we'll be coming your way again with the second edition of this particular season. Thank you so much. We'll meet you next time. Bye.